I've made a little less than $300,000 in the last 3 to 6 months day trading the futures and Forex markets. And what you're seeing right now is my personal proof of funded accounts and payouts up here or up here. But before any of this, I was just like most traders, stressed, inconsistent, blowing accounts, passing challenges one week and failing the next. I know what it feels like to watch the markets move and exactly where you predicted, but without you in the trade. I know the pain of revenge trading and over trading and waking up the next day wishing you had just stayed disciplined in the market. That's why I dare you today to watch this video to the end because I'm going to show you the only two indicators you need, the only ones I've ever used in my entire trading career, the same ones that finally brought consistency into my life. I'm going to break it down to you so clearly that even a beginner can understand and apply it. By the end of this video, you will know exactly how to set them up on your charts and how I consistently make over $3,000 per week using them. And my goal is to completely change your perspective on how simple trading really is. This won't be a long video at all, maybe 9 to 15 minutes maximum, but I'm going to teach you as much as possible in that short time to permanently transform your trading career. Watch until the end because if you do, it will be a game changer and you'll be able to take everything I teach and implement it immediately. Let's hop right into
So
the
this is going
charts.
to be a very quick one, and I'm just going to show you the indicators that actually matters the most and make me the most money on a consistent basis. And if you click on this indicator box just right here, it's going to bring out all the technical indicators that you currently have. We have 24-hour volume, our own oscillators, blah blah blah, jargons, rubbish. You don't need all these indicators because they lag and they only tell you price after price has already been printed. So it's more like they're telling you what's going to happen after it has already printed. You've already seen what's going to happen already. So they lag and they are not actually going to make you anything. They're just going to keep you in the loop of losses, consistent losses, win loss, consistent losses. And the only indicators that you need are these two on my favorites, right? I trade pure price action using time, then price. So I like to see what time it is and then what price it is before I trade. So basically, all you're going to do is just this one is the let's start with this one. This is the fair value gap by Anche. You can type it on the search bar. Just search fair value gap by Anche, Anche 1991. This is going to show you the fair value gaps, and it's very simple. It just shows you exactly what the fair value gap is and if it's been filled. So you can see right here we have a fair value gap. Half of it has been filled. The rest of the fair value gap is going to be in green, which means it hasn't been filled. This is the fair value gap right here, has been filled. This is the fair value gap right here, has been filled. This is another fair value gap, another fair value gap. It's going to show you. So when the fair value gap has actually been filled, then it's going to be grayed out like this. But when it's unfilled, it's going to be green. So this is unfilled, this is unfilled, green, green. And if you just keep going back in price, you're going to see the fair value gap showing you exactly what it is. And fair value gaps are used to actually just tell you where they've been aggressive buying or aggressive selling, because the only way you can get a fair value gap is if at a particular price institutional traders aggressively bought or sold at that point, which means they aggressively bought or sold and then price sprinted very high and created a gap like this. So how do you use the fair value gap? So this is the indicator right here. First, fair value gap by Anche, just search for it. It's the same thing. Once you search for it, it comes out like this. It's not complicated. It's very simple. It just tells you points where there could be reversals. It tells you points where retail traders are going to be interested. It tells you points where institutional traders are going to be interested to buy and sell as well, because it's just showing you exactly what has happened in the past, what institutional traders has done in the past, the aggressive buying or aggressive selling that has happened in the past. So you can actually position yourself for maximum profitability in the future. So basically it's telling you this has happened at this point. This is a point of interest. You should be looking at price at this point. That's what it does. So Fair value gap by Anche, very, very great indicator. It's going to change your life. Another indicator you should also look at, which is also the step two of my trading strategy, the FXN Asian session range by Rob Minty. He has about 10,000 plus people using it currently. It's called FXN Asian session range. So you see that I only have two indicators right now on the chart, one fair value gap and the second one is FXN. So let's dive into FXN Asian session range. And I'm also going to show you how to search for it. So just come into the search and search for FXN Asian session range. And this is basically just going to take you to, so the best way to see this is just you use the fair value gap to identify your daily bias. So you know exactly what you're trying to do. And then you go down to the 15 minutes, 5 minutes time frame to use the FXN indicator to show you liquidity basically. So it's going to show you time-based liquidity and it's going to show you Asian range liquidity and it's also going to show you London range liquidity. I didn't put a New York because I it doesn't matter. I trade New York, so I just want to see what's happened on Asian and what's happened on London. And you see how clean and clear this indicator is. It doesn't have too many jargons. It's very, very clean. You can easily spot it. You can easily understand it. And when you click into it, you're going to see my settings right here. This is what you're going to see. Start of Eastern time. So this first one is for Asian session. So start of Asian session is going to be 8 p.m. Eastern time and it's going to end at 12 noon Eastern time, which is going to appear on the chart. Okay, sorry, 8 p.m. Eastern time to end at 1 a.m. Eastern time, and then that's going to show. And then you could also use the extend session lines to one blah blah, but that doesn't really count. You can use, I use blue for my Asian range, and then Asian box one, Asian line solid. You can just take a screenshot of this so that you can follow it through. And then yeah, two, the session high low midline, two dotted white normal, and then show London session. You have to check this because this is going to show the London session. So London session basically starts from 2 a.m. Eastern time. This is London session. It starts from 2 a.m. Eastern time and it ends at 5 a.m. Eastern time as well. So I use the teal color. I use one box solid, two line, dotted white, normal. Take a screenshot of this. And then the New York session. If I'm going to show New York session box, New York session is going to start from 8 a.m. Eastern time to 12 noon, which means at 12 noon you shouldn't be looking for entry. Even at 11 a.m. I'm done. I'm not looking for entries. If I don't catch a trade by 11 a.m. Eastern time, I'm not jumping on any trade again because it's low probability and it's going to chop around and probably just stop me out at the end of the day. So basically, you're looking to trade from, this is a New York session. I typically just look for my entries from 8:30, 8:35 a.m. after the initial news, unemployment news, all those news data. I don't really care much about news. I don't use news. I only analyze the news to see, okay, fine, is today going to be an expansion or is today just going to be another consolidation? So more like I avoid 8:30 news and 10 a.m. news I'm fine with. But this is not a news video. This is an indicator video, and all I'm trying to say is this is all you need in terms of in terms of indicators. And New York starts at 8 a.m. and ends at 12. Silver one, but I don't turn this box on because I don't need to turn it on. And if you're trading London session, you probably don't even need to turn this London session on. Then you're going to only be using Asian range as your liquidity. But I found out that most of the times price is always expanding at 9 a.m. New York time. There's a tip right there that I think you should look at. And yeah, so basically this is Asian session range and these are the settings I currently have. I only use the Asian range and London range basically just to see what they have done, to see where liquidity is being taken. And this is a trade I took on Friday right there that banked about 1 to 3.33 weeks to reward, because I only use this to check, okay fine, we've taken right there. So this is how I use the indicator basically. So we've taken Asian range liquidity. That's the first liquidity that we took. And we also took London range liquidity, which is also a time-based liquidity. So we've taken Asian range liquidity, we've taken London range liquidity, and then we created a market structure shift on this point on the 15 minutes time frame. And that was it. Boom. I cut my trade clean. You don't need to look too much. You don't need to draw too many lines. It's very, very simple. It's easy to understand. It's straight to the point. It won't predict price, but it will tell you what is happening right now so that you can capitalize on the price. And if you're using a time-based liquidity, you're already restricted. So you you've calculated everything. You've calculated the time, you've calculated the price, and all you need to do is enter at that particular time if the opportunity presents itself on a particular day. So basically, the last one I would also like to throw in is equal highs and lows. Equal highs and lows by J Stuff. So you can put this one here as well because equal highs are also seen as liquidity points. And let me remove this one. So equal highs are also seen as liquidity points. Equal highs and lows are seen as liquidity points. And if you're able to use this to see, okay, fine. If you're going to sell, then you probably just need to wait for this equal highs to be taken out, then you look for your sell. This would save you a lot in terms of cost as well, because a lot of times price is looking for a way to manipulate, and the only way price manipulates easily is equal highs. They're seen as magnets. So you're only selling when price has taken an equal high, and basically you don't use it every day, honestly, but you have a higher chances of catching a good trade after equal highs has been taken. And now if we look at this week, you can basically just see for this sell right here, price took this equal high, took it out, and then sold clean, clear as day on a Friday. And then if you see another equal highs right here again, price literally swept these equal highs and sold aggressively. So price is looking to take equal highs, and equal highs are seen as magnets in the market. And then, so yeah, so starting from the top, we just need a couple of indicators. So basically, so if you look at this, you're going to see the very first indicator you need is a fair value gap, because that's going to show you the daily bias. That's going to show you where price is currently at, or where price is expecting or possibly going to reject from. So fair value gap is used to spot, imbalance, and imbalance is created based on aggressive buying or selling. And aggressive buying or selling tells you that at that particular price, people, institutional traders, and a lot of retail traders believe that price should go down. So they sold aggressively or bought aggressively. And you can see it right here, clear as day. That's indicator number one. And then you can use that to spot, okay, fine. If price comes back into this fair value gap, I'm looking to either sell or buy. So you're looking to sell on a 4-hour fair value gap bearish, and you're looking to buy on a 4-hour bullish fair value gap, basically. That's a fair value gap indicator. It's clear as day. It's going to show you when it's filled and when it's not. The next indicator, which leads us to step two, is taking you straight to the lower time frame, telling you about time-based liquidity, Asian range liquidity from this time to this time, London range liquidity from this time to this time. I've shown you the settings already. You're just basically using this to see, okay, where is price taking right now? Is price taking London range liquidity, so that we can expect that price is going to go and take London range low. So for example, London range high has been taken. We're looking at it like, okay, fine, and we're on a bearish fair value gap. So if we're looking for sell, what's the target? The target should be London and Asian range low. So that's how you're going to use important time-based liquidity. But with time, you're going to master it. It's very, very simple. Literally, you can come into the chat and in 5 minutes, you know exactly whether you're going to be trading that day or not.